Managing Director, Mr. Kuldeep Chawla, Chief Financial Officer, Mr. Vishnu Murthy, Senior Vice President, Risk and Control, Mr. Abhishek Kapoor, Chief Operating Officer, and Mr. Neeraj Gautam, Vice President, Finance. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Kuldeep Chawla. Thank you, and over to you, sir.
Thank you, operator, and a very good evening and a warm welcome to all of you. My name is Kuldeep Chawla, the Chief Financial Officer of Puravankara Limited. We hope you and your family are safe and well during this pandemic. Thank you so much for taking time to be with us on this call. The investor presentation and the financial results for the quarter ended June 30th, 2020 have been uploaded on the stock exchange, and we hope that you had a chance to at least glance through them. I will start with a short update on the business and how we've been navigating these unprecedented times. Following that, my colleagues and I would be delighted to answer any questions that any of you may have. The last several months have been remarkable, and that has led us to adapt and become much more agile in how we carry on our business. The economy has faced unprecedented challenges. The real estate sector has also had its share of challenges, coming on top of a long slowdown, especially in the residential segment. The country has only recently opened following the nationwide lockdown. Given the slow pace of reopening, coupled with the threat of a second wave of infections, we expect the near term to remain a little bit uncertain. However, on a medium-term basis, we believe that there are several positives for the sector. We are seeing one of the best affordability levels in the last decade, a combination of low mortgage rates and higher affordable and value for money project launches, along with good prices. The current EMI to gross income ratio is down to around 30% from a peak of 50%. Affordability for an NRI home buyers is even better. All this combined with other factors will help revive housing demand cycle once the impact of COVID recedes on the economy. In addition, the accelerating tailwind of consolidation augurs well for organized, well-established and branded players such as Puravankara and Provident. Of the total launches in the year ended March 20, approximately 60% were from the top 25 odd developers in each region. The balance 40% coming from approximately 1,000 developers. Residential demand in the Tier 1 cities over the last couple of years seems to have been around 300,000 units despite multiple setbacks and regulatory disruptions. Coming to the quarter, we focused our efforts on business continuity and adopting newer and improved ways to do business. Our digital transformation efforts continue, and we feel it is important to adapt more than ever before. We see digital catalysts such as supporting work from home or taking cost out driving these initiatives. Our digital platforms such as Book My Home have seen an excellent engagement, and we've already had 3 launches through this platform. While decision-making cycles have lengthened, the conversion rates have been much higher. One of the biggest dynamic changes is how customers are also getting more conversant using digital technologies to buy what was traditionally a very physical experience. We've had to virtually create the experience to engage with our customers, and we are very pleased on how our teams have adapted to these new approaches, but also to how customers are engaging with us. We also launched or relaunched our website in the quarter ended June 30th with a new interface and a lot of features and customizations, and expect that to add to our digital efforts going forward. One of the new launches during this period was a plotted development under the Provident brand, Provident Woodfield. This is probably the first online launch of any project in India. Provident Housing is poised to redefine the way plots are identified, developed, sold, and sustained. These plots for sale near Electronic City promise large, wide boulevards with beautifully manicured landscaped gardens, a plethora of amenities, a luxurious clubhouse, community infrastructure, and underground concealed services planned to seamless perfection. We recognized customers want more flexibility and space, especially in the light of COVID-19, and we are pleased to report the project has seen an excellent response. Looking at plotted projects from a business point of view, we have many advantages such as quicker monetization of land, faster sales compared to apartments, better cash flow generation, and a faster turnaround on investments. We already have 2 more such projects and will continue to look at such opportunities. We also started sales in 2 Puravankara projects, Purva Atmosphere in Bangalore and Purva Aspire in Pune, both of which were well received by the market. With Purva Atmosphere, we started a new World Home series, which will be ultra-luxury series under the brand Puravankara. Coming to the operational performance, Q1 was relatively good when compared to the impact of the lockdown, with 536 units being sold as compared to 588 units being sold in Q4. The booking value for these 536 units in Q1 was 398 crores, an improvement of 5% against the sequential March quarter. Collections lagged, but are likely to pick up going forward, along with both sales increase and customer inflows. We continue to focus on selling our ready-to-move inventory. Ready-to-move inventory sales in Q1FY21 were 136 crores as against 147 crores in Q4FY20. We are on track to reduce our existing ready-to-move inventory to 0 over the next 12 to 15 months. We believe this bodes well for the company. Coming to the financial performance, the consolidated revenues for the quarter were 190.53 crores and were adversely impacted due to COVID, as both customers and the authorities both either deferred registration or were unable to complete the transaction. EBITDA was reported at 67.04 crores. Loss after tax was 16.75 crores. These losses, as we mentioned before, were due to a significant delay in registration of units across all our projects, alongside the marketing and other pre-launch expenses for the launches that were done during the period and going forward. That said, the gross operating surplus was 36.4 crores for the quarter. We've continued to maintain good liquidity during this period. Debt was at similar levels compared to March 2020. Our net debt to equity has been generally trending down or remained steady, and we will see this continuing going forward. Our net debt to equity stands at a similar level of 1.33 compared to March of 2020, but is lower than the 1.42 times seen a year ago. We have a very prudent capital allocation strategy in place with a clear objective to release capital from existing land holdings, plotted developments, and judicious investments and launches going forward. On the new launches, we had announced plans to launch almost a dozen projects this year, and we are continuing with that trajectory. This would be spread across 4 or 5 projects in Bangalore, 2 or 3 each in Mumbai and Pune, and 1 each in Chennai and Cochin, both of which are Provident. Finally, we would like to touch upon some of the policy measures announced by the government. The housing sector is one of the most important sectors in the economy, and its importance has been further strengthened and realized with everyone wanting the comfort and safety of their own home during this pandemic. The government has announced certain measures such as extension of registration and completion date under RERA by 6 months, the use of force majeure clause, special liquidity support for housing finance companies and NBFCs, and support to the affordable housing segment, and even the recent reduction of stamp duty by a couple of states, all of which should help spur demand as we return to more normal times. We remain confident that with our established brands, the continued trust of our customers, as well as our quality, our execution capabilities, our digital and widespread geographic footprint, and our launch pipeline will allow us to bounce back to normal in the next couple of quarters and emerge from this situation as a much stronger and formidable organization. With this, I'd like to hand you back to the operator.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question, you may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who wishes to ask a question, you may press star and 1. First question is from the line of Ankit Thakur from SKS Capital Research. Please go ahead.
Hi, thank you. Good evening, everyone. So I just wanted to ask you, talked about the affordability and, the EMI to gross income ratio going down. But on the demand side, how has it been? Has it picked up? Or do you see any demand? I mean, we are launching a new things, but is there demand for the same?
So let me answer that question, and then maybe Abhishek and or Ashish can also add in. I think, as they say, the proof of the pudding is in the eating, Ankit. During this period, we did 3 new launches across 2 cities and both our brands. Provident Woodfield sold more than 60-65% of the entire project. Both Aspire and Atmosphere sold 55-60% of what we had launched. The realizations that we received in these micro markets for all 3 projects were ahead of other developers in the region, and were in fact, in the case of Bangalore, where we have a comparable grade A developer, were in excess of that. So I think, at the end of the day, the fact that we were able, and 2 of these 3 projects were Puravankara projects. So
okay.
The point being that the launches, A, without any physical thing, completely digital, were successful. B, that we've seen very interesting responses to the manner in which both our teams are operating on a completely digital platform, and customers are engaging with us on that platform. Going forward, we expect a similar response to the launches for the rest of the year across the markets that we've identified and laid out across both our brands.
Thank you, sir. So basically, I think there has been you are seeing a good demand or demand coming back to, let's say, normalcy, or at least picking up. But on the sales side, is it all digital, or and how our digital strategy works here?
So this is Abhishek. Hi, Ankit. So basically, what we did was, as Kuldeep mentioned, we launched an online booking platform called Book My Home, and that has enabled us to do all 3 projects as e-launch. And we've obviously been investing in the digital platform of ours for last 4 years, and that had given us that leverage and advantage in the marketplace to take it to the market very quickly. What we have seen, and again to just reiterate and give you a number which is there, if you look at the number of March 20 and you look at June 20 number, we had sold 6.8 lakh square foot, we have sold 6.9 lakh square foot. If you look at the number of units sold, we had sold in March 20 588, in June 20 536. In terms of value, if you see, the sales value is 398 and it was 380 in March 20. So what you see is that clearly there is attraction. Customers were happy to engage with us on digital platforms. There were, of course, after the lockdown, it opened up. Customers did visit the site. That is definitely there, and that site visit has only improved. So if we look at the whole process, leading up to now, with this whole unlocking, the site visits are only increasing. But the way we had conducted ourselves and the information that was available online, we had some very, very interesting and innovative tools and methods of selling, which has been very, very exciting, honestly. When you are in constraints, innovation really matters, and that I think the customers have recognized that, and this is the result of that recognition.
I'll just add 2 or 3 quick comments to what Abhishek just said. The whole the journey has been, how do you engage with all the stakeholders, whether it's our own people, whether it's customers, whether decision makers, channel partners, influencers, so on and so forth, and transform or replace what is essentially a physical experience to a digital experience. So whether it is transparency of information, access to information, the use of technology to inform, engage, demonstrate, convince, follow up, and use data analytics, artificial intelligence, so on and so forth, you can do a much more targeted marketing pitch and engagement that is not intrusive, and does everything.
Right. But sir, just to understand it more, you said you are using a different tools. So is it that during the lockdown, if I want to buy a house, do I go on your website and do I get to see a video? And is it because of that video, or is it the trust of the consumers on the Puravankara brand that is there that also kind of helps in?
I think it's a mix of both. You're right over there. The fact that Puravankara as a brand is clearly something which customers believe and have tremendous amount of faith in, and that's one reason why they engage. But the second reason obviously is what you said. We have virtual tours to interfaces with the RM, the information, the way that the whole experience is, the digital experience is, in terms of the way we share the information, and the way people endorse that information, right from other customers to experts on the amenities that we have designed and the project, the way it is designed. So there are multiple marketing initiatives that enable that customer to really get the first-hand experience without really going to the site. And the fact that he can actually do it at the convenience of his house, that he doesn't have to travel all the way, I think it just adds to the whole perspective that it becomes far more efficient and easier way of booking. So and getting information. So both. The answer is both.
Thank you, sir. But do you see this trend continuing post-COVID as well?
Yes, absolutely. I think this digital transformation, I think, has given a completely new experience to the customers. So a lot of customers have realized that they can get a lot of information sitting at home from their convenience. And then, later on, yes, there is site visits and there is improvement in, tremendous amount of improvement. In fact, in last couple of months, especially since they have opened up even the weekends, there's tremendous improvement on site visits. But having said that, customers do like a lot of this information on the digital platform, and thereafter, a lot of them do want to visit. a lot of NRI customers don't ever visit, and I think that this whole process has enabled them to take a lot of decisions without even visiting the site. And I think they have definitely grown to like it.
Thank you. Thank you, sir. That was very helpful. I will get back in the queue. Thank you.
Thank you very much. Anyone who wishes to ask a question, you may press star and 1. Next question is from Saloni Bindra from Akash Consultancy. Please go ahead.
Yeah, good evening, sir. I just had a question. If you could just help me with the absolute value of the completed inventory as on the end of quarter. I think you mentioned it, but I missed it. If you could just repeat it.
The absolute value of completed inventory as of 30th of June would be in the region of approximately a value of unsold inventory. It's a million square feet. It will be around 600
Million was on 30.
value. 1.03 million.
Yeah.
Around 600 crores.
crores.
600 crores
All right.
as of 30th of June 2020.
Okay. And so how much does Chennai and Bengaluru contribute to it?
Chennai will have a meaningful impact in that, because Chennai will be approximately, I'll just give you the exact number. Chennai should be around a third of this, or maybe slightly more.
No, it won't be.
Yeah, it will be about easily 0.13, 0.0.
Hello?
Yeah, about 35 to 40% will be in Chennai.
Okay.
Bangalore will have much less, but I want to give you a bit of information. Chennai, actually, across our projects, the sales have been outstanding, including during this pandemic.
Okay.
And actually, Chennai sales have grown at a very healthy pace over the last 3 years. The only thing that we faced a problem in Chennai with is on the registrations, and therefore on revenue recognition, because of the lockdown restrictions during this period until June, July.
Understood, sir. So, and also if you're seeing any signs of revival due to, ease in lockdown restrictions and the festive season coming back, do you see it bringing buyers back gradually?
Sorry, do we see it bringing back?
Buyers back.
The buyers back, yeah, gradually, because in lockdown restrictions, as well as, the festive season is coming up. So are you seeing any upside from that, or any signs of revival in the coming months?
Yes, absolutely. So what we are seeing, there's an increased trend of leads which has gone up, increasing trend of site visits which has gone up, and increasing interest in buying. So we are clearly seeing, as far as we are concerned, in the marketplace, customers are back, and in fact the interest rate, the reduction of interest rate has also enabled that decision making, because they realize that this is a great time to take that buying decision. The COVID period has also we have had a few insights wherein customers want to have their own homes. Their desire to have their own homes has gone up, and therefore they are definitely looking at buying. And so on an overall basis, the answer is yes. But of course, I'm sure that they are evaluating the developer and investigating before they're taking that decision. But we have seen a lot of revival in terms of customer site visits and interest, and the leads we are getting from the market. And in this market, in this situation, if there is a customer who's visiting the site or who's taking the decision to spend time with us, he's definitely a serious buyer. So in our mind, there is definitely an improving sentiment.
Okay. Thank you so much for the information, sir, and wish you all the best.
Thank you very much. Next question is from Harshvardhan from KVS Investment Managers. Please go ahead.
Hello. Hi, good evening, sir.
Good
No,
evening,
actually, this was
Harshvardhan.
regarding one of the questions, regarding digital initiatives you were talking before with the previous participant. I need to understand some same point regarding cost implications. Would that be leading to cost savings going forward?
Yes, definitely. So, in fact, our sales and marketing and distribution cost has come down because of these digital initiatives, and people have really preferred that media for getting information and consumption of information. So yes, the cost has come down.
So any quantitative data you can give, how much cost savings, any marginal cost savings that would be for coming financial years?
At current point in time, I can share with you that our cost of marketing has definitely come down by over 30%.
Okay, that is it, sir. And in the similar lines, there has been significant reduction in other expenses this quarter. So is this regarding because of marketing expense reduction only, or any other expenses that have been saved?
So we have taken multiple initiatives during this period to conserve cash flows and reduce overheads. And yes, it has resulted into multiple savings because it gave us an opportunity and time to relook at our entire strategy and costs. And the answer is yes, and that's long term.
It is permanent in nature, right?
Yeah, these are long-term savings.
And what any other expenses that have been reduced other than what kind of expenses that have been reduced other than marketing? Can you name a few so that it can be attributable towards that?
There have been reduction in multiple fixed overheads from the business point of view, right from salaries to rentals to so multiple travel has come down significantly. Most of our meetings are happening online, so lot of savings which are pretty much permanent in nature.
Let me put it this way: we've looked at the productivity of expense of every head.
Okay, sir.
So across the board, you will see, rationalization and productivity of spend.
And just what would be your monthly fixed cost in terms of expenses?
Sorry, say that again.
A monthly fixed cost. Hello?
The monthly fixed cost you're asking should be in the region of about 10 to 11 crores a month.
Okay, sir. And so another question, this was regarding there are multiple reports that suggest that construction activity is going to remain slow for going forward also. So what kind of expectation do you have regarding the construction activity? What capacity are you working on? And is there any wage increment that you have given to the laborers or anything of that steps that you have taken?
So, when we initially, when the lockdown had happened, obviously we had taken a lot of initiatives to take care of all the labor on the camp, on the sites, labor camps, whether it was hygiene, food, because work had come to a halt and all of that. All our contractors and laborers have appreciated the effort that the organization had put behind supporting them during that process. After the lockdown opened, in the first phase, we had a lot of reverse migration, which I think they wanted to go back home, meet their families, etc., etc. That process had brought down our manpower significantly, but we are seeing a resumption of the labor coming back to the site, and that has improved, I would say, almost 3 times from the bottom. So we are now up almost 60%, over 60%, in fact, and every day improving. So we believe that in this month we will get to about 70% of our labor strength. So definitely there's improvement, but obviously there is a lag between this improvement and actual milestones, and then things to come back to normalcy. So we are on our way, but there is still some time to go. But we are definitely on our way back, both in terms of the labor strength and the milestones.
Okay, sir. That is very good, sir. And just one more thing, sir. How is the Q2 looking for you, sir? How has been the inquiries and how has been the sales and order book for rentals in the Q2, if at all? Just a little bit of guidance or outlook you can give for Q2 and financial year 21.
Yeah, I think we can take that offline. We do not offer forward-looking forecasts or projected numbers, for the subsequent quarter or years.
Sure,
But
sir. Just one
what we
thing,
definitely can tell you is that the number of inquiries are increasing. We're seeing good traction across the board, both on ready inventory, on sustenance sales, and on recently launched projects.
Okay, sir. Thank you, sir. I will join the queue for further questions. Thank you.
Thank you.
Thank you very much. Next question is from Tirad Muchala. Please go ahead.
For taking my questions. I wanted to ask you about the commercial business that we are trying to develop. One is that has the pandemic changed your plan or opinion on how to develop these commercial assets? And the second was that the cost of debt that the company is incurring, does it make sense, or are these projects commercially viable for you guys to raise money at % and
The person you are speaking with has put your call on hold. Please stay.
Sorry. Hello? Hello?
So go ahead, sir. You're audible.
Yeah, sorry, we lost you. Could you repeat your question again, Tirath?
Right. The second part of my question was the kind of cost of debt that we do incur. Do these commercial assets are they still viable at this kind of cost? Hello?
Am I audible?
Yeah.
Yes, Ashish, you are audible.
Oh, okay. So as far as our current portfolio of commercial assets are concerned, so this land is already bought. Most of them are all historic lands. They are mostly CBD properties held at historic value. So for now, I think we will continue to pursue development. Most of them are in the design phase. The design should take another quarter or so. Two or three of them, we've completed design, completed sanction. On that, we would start construction. Your question on the cost of debt. Today, even for a company like ours, for construction finance or good projects, the cost has not gone up. So therefore, I think we will stay committed to building that book of commercial.
And is there a change in the landscape in terms of the kind of commercial assets that are demanded by the market right now, or is everything as it was 6 months ago?
I think it is very, very early stages. I think different companies are giving different sound bites in terms of work from home. How much percentage will be work from home? Will it be mandated? Will it be voluntary? We don't know. So what we believe the effect, if any, will be more felt, I think, in these large campuses. CBD, fortunately, you don't have enough supply of grade A office space. So because of the lack of supply and very few developments that are already built and very few that are going to be built because there's no more land available, I think they should hold their value and importance.
Okay, and does it by any sense make sense to sell land as it is rather than develop properties on the land you own, just financially?
No. So, end of the day, I think land is our raw material. We are in the development business. Having said that, so if these are cities, for example, we have lands in tier 2 cities, small ones, right? So part of which, I'll take an example like Coimbatore. So Coimbatore, we've already developed two projects, one under Puravankara, one under Provident. So under Puravankara, we have developed the phase 1, which is 95 or I think 98% sold out. Phase 2, which we are going to start handing over now, that too, I think that is 99% sold out. So there we will launch phase 3 as well. But it's a small project. In the same land, we have a commercial plot, very small, 5 acres. Now, Coimbatore is not a city that we've identified for future growth. Now, that land, because being in Coimbatore, we may look at development versus monetization, right? So these tier 2 or some location in Chennai, we may look at it. But in the core markets that we are present in, which is Bangalore, which is Hyderabad, the main city of Chennai, Pune and Mumbai, I think this is the city we believe that we want to stay focused on. We believe that demand, once obviously sentiment stabilizes, the demand in these cities will continue over the next 5 to 10 years for projects that are launched at the right location, at the right price, at the right ticket size. And therefore, land being a raw material, I don't think we would, any development has two components in terms of profit. It has your land profit and it has your development, the value add that you do. There's a margin on that as well. So by selling the land, you'll be letting go of the development profit. So it's going to be a tough call, but a very interesting question.
All right. Thank you for that.
Thank you very much. Anyone who wishes to ask a question, you may press star and 1. Next question is from Ankit Thakur from SK Capital. Go ahead. Ankit Thakur, may I request you to unmute your line from your side and go ahead with the question?
Hello. Sorry. Thank you. So just wanted to check on the pricing side. Are you seeing any price erosions or are we having to give any discounts due to suboptimal demand?
Sorry, say it again, please.
Hello, can you hear me, sir?
Yeah, sorry, we lost you. Could you say it again?
Yeah. No, so just wanted to check on the pricing side. Do we have to give any discounts currently due to suboptimal demand?
No, the short answer is no. I just want to add one more color to it. When you draw inferences from the average realization given in our investor corporate presentation, it may be very misleading because it's a function of product mix. Let me give you an example. If you look at Provident, we sold plotting at a significant, say around 3,700 rupees a square foot. That is significantly lower than the average price that Provident apartments realize. So we don't want you to infer from that the price, there's been a price reduction. So it's a function of product mix, But in specific answer to your question, we've not needed to give discounts. In select cases, maybe instead of somebody paying in 45 days, we would have said, okay, pay in 60 days because you can't do registration, because registration was not open. That may have been, the only exception.
Okay. And so coming back to the debt profile, I was seeing our debt has been flat over the quarter, and I think we have around 166 crores of cash and cash equivalents on our balance sheet. So, and due to COVID, we are kind of booking losses. So, going forward, do you think we would need to go for a fundraise? Given I'm looking at the robust pipeline here. So, do we need to go for a fundraise?
So let me answer your question in two parts. Part one is that I think for now we have enough liquidity and lines of credit, are available to us for our ongoing projects. For the new launches, there would be maybe some small raises, but they will typically not be more than, let's say 100 crores. And I'll tell you why the number. When we've done a large number of launches simultaneously, we need a lot of pre-marketing and marketing expenditure to launch the projects. But the important point is that going forward, as we've done, with all our launches, including the launches we just did, we don't need money or we need very little money for working capital debt. So unlikely we will need large amount of raises. However, we could look at raising non-debt type of risk-free capital, or capital which participates, without there being a committed return, for opportunities that present themselves on the long tailwind of consolidation that we are seeing. I mean, just to give you a data point, in the last 6 months, organized developers have seen their market share in those markets grow up significantly, despite a reduction in the overall market in terms of sales. And you're seeing that certainly in all the listed developers.
Right. And sir, if you could talk about who are the lenders for us?
So the bulk of our loans today are from the likes of HDFC, ICICI, IndusInd Bank, Standard Chartered Bank.
Okay, so nothing from NBFC side.
Sorry, nothing from?
Nothing from NBFC side and all the top-notch names.
Yeah, I think we have some money from NBFCs. We've got a little bit from PNB Housing Finance and some loans from L&T Finance. But we have no loans from Indiabulls, Yes Bank, DHFL, Edelweiss. We've never had loans from them. We have a 40 crore loan from Piramal. That's it. So.
Okay. Thank you, sir. That was helpful. I'll get back in the queue.
Sure. Thank you.
Thank you very much. A reminder to all the participants, you may press star and 1 to ask a question. Next question is from Saloni Bindra from Akash Consultancy. Please go ahead.
Hello. Yeah, so I just wanted to understand your plan for repayment in FY21.
Yes, ma'am. How can we help you?
I just wanted to understand your plan. How do you plan on your repayment in FY21?
So at this point in time, our repayments of loans for the year are secured with cash flows from cash flow generating projects, and we do not anticipate any problem with repaying or meeting all of our obligations.
Okay, and do you see any change in customer preferences towards ready-to-move-in houses, as compared to under construction because of the uncertain times? Are you seeing any uptick?
So we have.
Demand?
Sorry, please go on.
I just wanted to know if you're seeing any uptick in demand from ready-to-move options.
Am I audible?
Yes, Ashish, you're audible.
Yes. I think we've seen a constant demand over the last, I would say, maybe 2.5 years in RTM. Yes, post-COVID, there is a slightly higher percentage demand, I would say, in RTM, but there's an equally increased demand in our new launches and ongoing projects. Please understand that today the number of launches have come down. Therefore, the choices that a buyer has come down. So if he's going to narrow down to the top 4-5 brands, and then there's a clear advantage of buying at launch in terms of pricing and choice. There's a clear advantage of buying a product halfway through construction. The price hasn't gone up the way it does during completion. So I think at every stage, launch, under construction and ready, there are pros and cons in terms of pricing and choice. What we have experienced, I think, is launches have done well. I think ongoing construction, the project sustenance sales are okay. RTM is doing extremely well. So I think there's maybe a high percentage boost in the RTM, but I think equally each sector is doing well. In fact, if the last 4 weekends post, I think some the lockdown opening up, etc., we are seeing a very sort of an exponential increase in terms of site visits, which is very, very encouraging.
Oh.
And these are for under construction projects.
All right. I just wanted to understand on that. Thank you so much.
Thank you.
Thank you very much. A reminder to all the participants, you may press star and 1 to ask the question. Ladies and gentlemen, you may press star and one to ask the question. Next question is from Ankit Thakur from SKS Capital. Please go ahead. Ankit, may I request you to unmute your line from your side?
Hi. Thank you. So just one last question from my side. Where do you see the demand more in? So are we seeing a demand in luxurious or 3 BHK or 5 BHK kind of sales, or is it going for a smaller affordable flats?
So let me just share with you that we are actually seeing demand in both the sectors now. Both the categories. We have launched a World Home collection in Bangalore, and that's seen very, very good response. In fact, it's seeing increasing amount of interest from the customers because of the amenities and the product that we are offering. Similarly, plotted saw great demand. As Ashish mentioned, in sustenance, in fact, our number of site visits and numbers have improved, and so on an overall basis, we are definitely seeing good traction. Fortunately for us, we are not in any of the oversupplied, saturated locations. So overall, we are seeing good traction across the board.
And sir, are you seeing any impact of work from home culture that changing and you're getting more demand for the larger flats due to everybody would like to have a separate walk room or something like that, or it is too early to talk about it?
No, interestingly, what we are seeing is clearly home ownership is very, very important now. That's become extremely important, and probably work from home has got something to do with that for sure. But having said that, generally, I think people are far more particular about space planning in their homes, which has always been our strength as well. And they are looking at the product differently. There is obviously a need to upgrade by everybody because now in the current environment, I think people are also looking at it as an opportunity to say that they want to buy long term, and as we said earlier, a lot of people are also buying under construction and new launch projects as well. So we are definitely seeing a preference. We are also seeing some very interesting response from the customers in terms of their expectations from home, in terms of amenities, etc., because of this COVID situation. And that, I think, they are far more health conscious in the way they are looking at it. And some of the technologies we are implementing in our product is enabling them to understand that the changing consumer behavior is getting addressed. Their demands are getting addressed. So to answer, yes, there is a change in the way customer is looking at the product and the amenities and the way we are designing the product.
Thank you, sir. And sir, just last question from my side. When do you see the normalcy coming back to? And when I say normalcy, what I mean by that is we are still making losses, and I understand it is a COVID impact, lower demand. But when you see demand coming back to its normal level?
What we are clearly seeing that people are not having that fear that was there earlier of stepping out, and the COVID fear it doesn't seem to be. People don't have that fear anymore. People are going out there and doing things. I mean, I think this unlocking has proven that across the board and across the country, the way people are going back to lead their normal lives. So we are hoping that that trend will continue, and that will definitely enable and it will help build more confidence in people to continue to take their decisions and live a normal life going forward. So we are hoping that this trend will continue, and it will normalize as we go along.
So, but any timeline you can talk about, like let's say by Q3, Q4, you think everything will get back to normal, or we are still uncertain about it?
I think we'll have to continue to watch how it pans out, but the trend is positive and it's looking good. As we mentioned in the earlier conversations also, there is a lot more site visits, lot more interest by customers. So we are seeing a very, very positive trend.
Okay. Thank you, sir. Thank you. That's it from my side.
Thank you very much. Next participant is Harshvardhana from KVS Investment Managers. Please go ahead.
Hello. Hello, hi, sir. I just want to follow up a little bit on debt part. So what kind of debt EBITDA ratio or debt equity ratio are you expected to maintain next 2 financial years? Are you expecting
Just one second.
reduce it to?
Our goal is to go to 1:1 on the debt equity ratio, but I just want to make a point, on this ratio bit because, accounting standards, change things. What is more important is our focus is that we want to look at stability and visibility of cash flow that is able to service the debt comfortably, which is the position we're in. We've prepaid over the last year and a half, a large part of the debt because of the cash flows we've had from things like ready-to-move inventory sales. So that's what I'd like to just give you as a direction. Beyond that, we don't want to give too many forward-looking statements on projected numbers. Suffice to say that, we are in a comfortable position to meet our debt obligations, including during this period.
Okay, sir. And did you opt for any moratorium for that is currently multiple companies are opting for?
Yeah, so from a moratorium point of view, we took around 85 to 90% of moratorium 1, and we took around 2/3 of moratorium 2 in terms of our loan book. The other point that I'd like to make is that we've done this because we don't know how deep and long this pandemic would be, and we want to remain agile and resilient. But as we moved from 1 to 2, we got more comfortable, and at this point in time, without any further moratoriums, unless things go really south from here, we should be in a position to very comfortably meet our debt obligations.
Okay, sir. And what in the current debt levels that you have, how much amount would be attributable towards long-term debt?
If you're saying long-term debt beyond the next 12 months?
Beyond 12 months and 3 years, if possible.
I can tell you that beyond 12 months, we have 1 second. We've got 92% of our debt beyond 12 months repayment. So only 8% of our debt, would be repaid in the next 9 to 12 months.
Okay.
Which means that, we are ahead of our schedule in terms of our mandatory repayment. See, let me just put a little bit of color around that. I told you that, for example, in April, May, June, our ready-to-move inventory sales were 135 crores. In Jan, Feb, March, they were 147 crores. This kind of thing and the success of new launches, both in the short term, ready-to-move inventory sales gives me cash flow in the short term. In the medium term, good launches give me 2 things. 1, I don't need to borrow more. And 2, I'm always ahead of schedule.
Okay, sir, that is good to hear. And just one more last thing, sir. From your customer, are you expecting what kind of delays are you expecting in terms of installment prepayment? From your customers, any ballpark percentage, any delays you are facing?
No payments.
So yes, to some extent there have been delay in customer payments because of the moratorium period, because people, kind of have understood somewhere that, they can delay, and this is a interest-free period. But having said that, I think that is getting streamlined, and the people are coming back to make the payments. So we have seen an improvement in the collections and in the way people are perceiving the whole thing.
Thank you very much. Ladies and gentlemen, due to time constraint, that was the last question for today. I will now hand the conference over to Mr. Kuldeep Chawla for closing comments.
Thank you very much, ladies and gentlemen, for all your time on a Friday evening. We think these are exciting times, interesting times for organized developers such as ourselves. If there are any further questions, we are happy to take them offline and schedule meetings with one or more of you, starting midweek next week. Thank you once again for your time and attention.
Thank you very much. On behalf of Puravankara Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.